And there will probably be a moment to midnight where the market has, in the negotiations, where the market has to be pricing some reasonably high probability of a no deal outcome.
I think there's more of the probability distribution is on higher interest rates. That's certainly my view on it.
There will be a lot of volatility in November and December over the parliamentary vote.
But don't underestimate the impact on the debate when suddenly there is a deal.
Welcome to The Exchange. I'm Roger Hirst, and today we're going to be tackling the thorny issue of Brexit, but not from the angle of whether it's a good thing or a bad thing, but really what are the potential outcomes, probabilities, the key dates and the key people. With me we have Oliver Harvey from Deutsche Bank, who's an FX strategist, economist, and has been a specialist in Brexit since well before the referendum in 2016. We have Helen Thomas, who runs Blonde Money, her investment research house and company, and has also been looking at how all 650 of the UK politicians may vote if there was a referendum or a choice coming up in the near future. And we have Rupert Harrison from BlackRock, where he's a portfolio manager, and before that, he was an advisor to the Treasury. So I'm going to kick it off really just starting with the key dates, and maybe, Ollie, we'll kick off with you, but we'll see. What are the most important dates on this? What matters, and are there any
Well,
precedents?
I think the most important date is the parliamentary vote, which is probably going to be towards the end of November, beginning of December. Before we get there, there are a lot of dates along the way. We obviously had some negative rhetoric around the Salzburg meeting last week. We have a Conservative Party conference. We have a October European Council summit. We have another summit in the middle of November, which is the 17th has been the date people have highlighted, which is supposed to be when the final Brexit deal gets done. We think that between now and the middle of November, or that November the 17th date, we will get a deal. There will be some political acrobatics to get there. Where we have a lot more concern is whether that deal between the UK and the EU27 actually gets through Parliament. This parliamentary vote happens, we don't know the exact date yet, but probably late November, early December. So I think that will be the really key date before the end of the year.
And what's the big date in March? And is that March 2019 as well?
Well, March 29th, 2019
Right.
is Brexit Day.
Is Brexit Day, but we've got an awful lot to get through before there. So, key date, sometime probably in November. What are the key people to look at, and what are the key issues? I mean, where do we go on this?
I mean, I think the next move has got to come from the British government, and then you've got quite a short window between the end of conference season and this October summit, and really everybody is waiting for the UK move. And if there isn't a UK move, then I think we're going to have a big showdown at that summit, because the European Union have taken the decision to say, OK, if we are not getting significant progress by this point, then the November summit's off, and we have a crisis moment.
Well, and your point, although the parliamentary vote absolutely is a key date, ahead of that October week after that summit looks like it could well be a point where it all breaks down, right? So
If you think it's going to break down.
if you think it's going to break down, which obviously we're going to talk about more, but the path to the path until the end of the year is incredibly volatile on this.
Yes.
And so, I mean, there's always been this thing between, what you get in the press. There's lots of people who are grandstanding, but are just making noise, but are not that important. Who are the key people in this? I mean, who actually matters?
No, I mean, I think that there are some very high-profile individuals. Boris Johnson being a key one. He's now the kind of enemy of the Prime Minister, number one enemy of
What is
the
he now,
government's
anyway?
plan.
He's not in cabinet anymore, is he?
He's a backbencher. You've got David Davis, also the former Brexit secretary, another very prominent backbencher, threat to the government. And then you've got Jacob Rees-Mogg, the slightly eccentric Conservative backbencher who leads this European Research Group, which is a kind of group of Brexiteers. They are the ones who get most of the coverage in terms of being against the government. I think the big question, though, is do they really represent numbers of votes? And are they going to bring their people with us? And this is going to come down to, in the end, Lyndon Baines Johnson's first rule of politics, which is you've got to know how to count. So when Jacob Rees-Mogg stands up and says the Economic Research Group, which counts 50, 60 MPs, are going to vote against a Brexit deal, I think we have to take that with a very big pinch of salt, because in the end, this is not going to be about those key faces. It's going to be about each of those 650 MPs. How are they going to vote when the time comes? Because I think that the point is that the key point of uncertainty, in my view, is going to be this parliamentary vote, probably in December, I would guess, because my view is we'll get a deal at the European level, and then it's going to come down to this vote in the House of Commons.
And who are the rebels in this? Because I'm never sure whether the rebels are those who don't want Brexit within the government versus the rebels being those who are kind of on the very far, what you want to call it, right, hardcore Brexiteers who are voting against this middle ground that seems to be formulating. I mean, who do we consider to be rebels, or is everyone a rebel in this?
Well, that is a key point, because often in politics, rebels are those against their party leader, but party discipline is completely broken down, not just in the Conservative Party. You can clearly see that with the Labour Party as well. Something like 55% of Labour MPs are publicly and clearly anti-Corbyn. So that's the majority of his party. So it's difficult for them, for high command in Labour, to talk about what votes they can deliver. So I think rebels is almost not quite the way to look at it. I think you need to look at sort of factions and groups, and essentially, if you want to really get simplistic about it, there are people who could back some kind of a deal, whether it might be a Norway sort of thing or a Canada sort of thing. Then there are people, we calling them ideologues, sort of so spiritually attached to either breaking free from the death clutches of the European superstate versus Remainers who are, how could you even think about walking away from your closest trading partner? And so, those are broadly the three kind of factions to look at. And I think that's better to look at it in that term and try and break them down into the numbers of each group than necessarily rebels per se.
I think Helen and Rupert are absolutely right. It just comes down to these numbers. I think the problem, if there is a problem that May has, is assuming she does get this deal with the EU at the European level, and assuming all the factions that Helen was talking about, she's almost got to sort of put forward two narratives, because on the one hand, she needs to bring the Brexiteers with her, and her approach presumably is going to be, if you don't vote this through, there's a high risk of a second referendum. You might not get Brexit at all, which is not what you want. But at the same time, she might think she needs to get some Labour moderates through. And the message to them will be, if you don't vote this through, it's going to be a no-deal outcome. It's going to be a crash Brexit in March 2019, which are obviously two contradictory narratives. And she's got to kind of build this coalition. How she does that, I think, will be very interesting.
So I think that actually that she can probably pull that off, because I think that the truth is both of those outcomes, no Brexit, no deal, are quite likely. Maybe 50-50. I don't think, if we get to a position where there is a deal, there's a vote in the House of Commons that votes the deal down, then the branches that open up of potential outcomes are, I think, incredibly wide and very, very hard to call. So I think you are going to have a situation where the game from Downing Street is going to be, can we get enough Labour MPs that are going to vote for the deal to offset enough of the Tory MPs who are going to vote against it? And I always think when you're thinking about these voting decisions, you have to think about what's the speech that the MP is going to stand up and make in the House of Commons. I think, for the Conservative, Brexiteer, member of this European research group, which everyone says it's not European, they don't do any research and they're not a group. But anyway, this is a sort of moderate Brexiteer who might stand up and say, look, I don't like this deal. I think we could have done this far better, but we've got to deliver on the people's wish as expressed in the referendum, and the risk, if we don't pass this deal, of going into a second referendum and Brexit never happening is too great. Therefore, with a heavy heart, I'm going to vote for the deal. Right? That's quite an easy speech to write. And then the Labour speech, say it's an MP like Caroline Flint, who was a Remainer but in a very Brexity seat, you could say, look, I don't like this deal. It creates too many barriers to trade. I think there's going to be an economic cost, but at the same time, we have to deliver on the people's vote. And the risk of no deal is too terrible for my constituents' livelihoods. I can't, with all conscience, vote to bring that about, so I'm going to vote with the government. And I think that those dynamics are what could potentially help the government get this through.
Often guilty of doing this, we focus a lot on the UK. There are obviously some European personalities that matter now into the end of the year as well. I think what happens in terms of Italian politics, in terms of what happens in German politics with Chancellor Merkel, who's had a few political difficulties. I think Merkel's rhetoric in particular has been less aggressive perhaps than some of the other European member states and maybe than Barnier's. So I think that's going to be pretty important to watch as well.
What is it the UK government, as it currently stands, may think she's going with to Europe on the 18th of October? Where is it within that extremes of nothing at all to completely out precipice?
Politics is about what sells, both to your party, to your constituents, to the public at large. So therefore, this is what is so difficult about a negotiation. It's, successful negotiation is the one that leaves everybody walking out feeling a bit angry. So that is almost political suicide. You've literally gone for the opposite of pleasing all of the people all the time. So, sorry.
I think that you can't understand. I think it's absolutely right. The landing point, if a deal can get done, is where both sides feel unhappy, but they feel that at least the other side is unhappy as well, therefore they didn't get screwed over. I think that's roughly where we're heading for. I think that a couple of things about this sort of Chequers deal, or I think it's going to be Chequers somewhere between Chequers and the current EU position is where the landing zone is.
And the EU position is basically...
Well, the EU position is complicated. Chequers is essentially saying, can we remain aligned in goods because of all these supply chains in autos and aerospace that are so vital, and because that's the only way we can see of keeping this Irish border, which is the key issue. And then Chequers tries to square that with a proper exit by not being in the single market for services, retaining control of immigration, not being subject to direct jurisdiction of the European Court of Justice. I mean, I have to say, a lot of the Brexiteers, if you had offered that to them 3 years ago before the election, that you can end up with all those things, they would have absolutely bitten your arm off to get it. So the test of a true Brexit has moved a long way, to the right on this spectrum. In terms of kind of where the landing zone can be, I think that don't underestimate the unhappiness on both sides, but don't underestimate the impact on the debate when suddenly there is a deal. I think that suddenly the leaders shake hands, 3 a.m, oh my goodness, Theresa May comes home with a deal. That will change the dynamic.
But hang on, sorry, I'm going to throw in David Cameron's. I mean, he came back with something.
I think that was a very different dynamic, because that was a sort of improvement to the European Union that was trying to persuade people that they liked it after all, and it totally failed. This is a binary choice for the UK, which is, are you going to do a deal or are you going to crash out? And suddenly when there's a deal on the table that's available, I think that dynamic changes.
I think just to your question, which was, what are we getting? And also to Helen's point, which is that ultimately politics is about what sells. I think a really important point to make is what actually this deal is going to look like in terms of what's written on the text. And if you actually look at Article 50, all you need to get a deal ultimately is a withdrawal agreement. And 2 of the 3 things in the withdrawal agreement have already been agreed. One is the money. The UK has agreed to pay 40 billion-ish. The second is citizens' rights, mostly agreed. So the third one we're left with, which is where the sticking point is at the moment, is Northern Ireland. The future relationship, and you're completely right that you will have to have something on the future relationship, because otherwise Parliament's going to say, well, what are we getting in return for the money? But in a sort of technical sense, the future relationship, a lot of the really difficult decisions over that is going to be left until the transition period. It's not going to be agreed by the end of March 2019. So I think there will definitely be this outline, but in a way it gives May a bit of scope to sort of fudge what that outline actually is.
But the key point is this backstop, which is about Northern Ireland, because the shape of that is going to determine the future relationship, because that is basically saying what is the fallback position for both sides, and that defines the bargaining power over the next 2 years as you try and negotiate.
And just defining Northern Ireland. Northern Ireland was basically Northern Ireland, Southern Ireland. Southern Ireland's part of Europe, not part of the UK. Northern Ireland part of the UK, and there was a hard border there until, was it 1997? And then it was opened up, so there's no longer a hard border, so you can just cross through. But the risk within the European, if we crash out of the European Union, you have to put a hard border back. In terms of the European perspective, haven't they just been very clear? They've just been saying, well, you've got your choice, you've done it. And how open will they be to negotiation? How much are they going to care more about the concept of the European Union and the Eurozone and all the rest of it and all those various sort of knock-on effects versus giving ground to the UK?
Well, the European Union have said since the beginning of this year that there are effectively 2 options on the table. One is a limited free trade deal, which looks like CETA, which is the deal they have with Canada, which is pretty limited. It's not actually that far away from WTO rules. It's a bit better than WTO rules, but economically speaking, not by much. And the other one is the European Economic Area, basically, which is the UK remains part of the single market in goods and services and has freedom of movement. What the UK's asked for actually is a model that kind of exists at the moment, which is actually what the Ukraine has with the EU. So the UK have asked for something called an association agreement, which is a big framework. But the analogy of that association agreement is probably what the Ukraine has. So the EU sounded very, very unhappy about Chequers, and we've had all of this negative rhetoric. But in a way, I don't think Chequers was as bad maybe as some people saw it, because it is actually, parts of it are already established in EU precedent, which is why I think that, there will be a lot of hard bargaining going on, but actually that framework, I think, will probably still be, as Rupert was saying, or a modification of that framework will still be what we get.
If we want to get very specific, I think that the key move on both sides that is the main way I can see through to a deal, and this is my central case. We may have differences on whether it's other people's central case. So at the moment, in the backstop proposal, the UK, the European proposal is that if a better deal can't be agreed, Northern Ireland will remain part of the single market and there will affect for both a single market and customs, and there will effectively be a customs border in the Irish Sea between the UK and Northern Ireland, and that is unacceptable to the vast majority of the is not just unacceptable to Northern Irish politicians, certainly unacceptable, I think, to the vast bulk of the Conservative Party, because I think as a step towards breaking up the country. The UK proposal is, can't we have that backstop apply to the whole of the UK on a time-limited basis? So they want to put an end date on that, and that is currently unacceptable to the European Union because it looks like this famous cherry picking of trying to have your cake and eat it, and mix metaphors. But I think the key move that needs to happen is the UK needs to accept, and this is going to be difficult, but I think it's doable, that the UK is going to remain effectively in the customs union with the European Union indefinitely, probably keeping alive this sort of technological solution that the UK has proposed as a sort of future destination. So it's a kind of ladder for Brexiteers to climb down, saying the dream of an independent trade policy is still available in the future, but for the time being, and with no obvious end date, we will remain in the customs union. And in return, the European Union needs to accept that, okay, the backstop can apply to effectively the whole of the UK. I think that is where the landing space for a deal is. And then other issues around the Chequers Agreement, which is the UK aligning with the European Union on goods regulation, but there's a concern on the European Union side that they're not aligning on workplace and environmental and other standards surrounding the cost base that goes into the production of those goods, which leads to a European Union concern about undercutting and social dumping. I think a lot of those can be pushed into the future relationship, but this key customs and this border in the Irish Sea is the absolute kind of key battleground for the next few weeks.
There's been so much uncertainty that it's been very, very hard to trade, and when people have traded it, they've tended to trade it through sterling. What are the ways to trade this, and what are the timeframes? Because is it similarly that we won't know anything until November, and therefore it's just not worth doing it, and therefore you should just trade everything based on its relationship to other world assets? Or should people take a view?
There's clearly a risk premium. We would all agree on that, really, that has to be built into UK assets. A debate about whether it has or it hasn't. There has been some underperformance of UK equities versus, broader European equities, for example. I think rates, it's a bit clearer. I think there's more of the probability distribution is on higher interest rates. That's certainly my view on it. Sterling is just a great pressure valve for this political acrobatics. My sort of view into the end of the year would still be biased to be short of sterling. Not only is there a great risk of Parliament voting down the deal, or at least being unable to come to a majority decision, just these numbers, as far as we're crunching them, are very tricky. It's simply, I don't think, could be prudent to be long sterling into that, that sort of the heat of that situation, and therefore, my bias would be to be short sterling into it.
I mean, you've sort of often talked about the way to get a deal done is for the markets to scare the bejesus out of the government by having a big shock in sterling or something like that. And obviously everyone was jumping on Carney's comments, was it last week or so, where he's saying we'll have to put interest rates up and house prices will fall by 35%. If we went to the worst case scenario of the full Brexit, if you want to call it a worst case scenario, isn't it better just to let sterling find its own level, not put up interest rates, which will kill domestic assets, and let UK assets become attractive to foreigners again by letting sterling fall?
I mean, I agree with Helen in the sort of assuming there is a Brexit deal, the path of interest rates is going to be higher. I think in the event that there wasn't a Brexit deal and you did have a crash Brexit in March 2019, I don't think you should take at face value what was reported, Carney saying that they would be hiking interest rates. I think although you would have a big spike in inflation and they'd get very sort of sweaty hands about that, ultimately you're going to have a big economic shock. The unemployment rate is going to start going up. Bank of England will be easing policy, in my view. So I think in that scenario, interest rates will be lower. At least initially, there is a possibility that then you get a big fiscal stimulus further down the line and interest rates go back up again. But I think in the initial reaction will be quite similar to the referendum where you had yields lower. In terms of sterling, briefly, I mean, I think I agree with Helen, which is that I think, we will get a deal, but the path to that deal is going to be fairly rocky, and there will probably be a moment to midnight where the market in the negotiations, where the market has to be pricing some reasonably high probability of a no-deal outcome. If that's the case, sterling should probably be lower, at least in the near term, and then it might rally again. But in terms of trading it, I mean, I think the market is struggling to efficiently price what is an extremely complicated set of negotiations. And I think that's why you have these big moves in sterling, which don't necessarily correlate to particularly meaningful events, it's definitely going to be tricky trading it into the end of the year.
I mean, I think as ever, particularly around currency, it depends on your horizon and your tolerance for volatility. Let's think about what's the kind of really big risk that people are thinking about hedging against, which is like a genuine no-deal exit, disruption at borders, big direct hit to economic activity. I personally think that is the least likely outcome of all. And so I think that spending a lot of money hedging against that, I think, is not money well spent. I think if we get to that situation where a deal is voted down, there's political impasse, and it looks like we're heading towards no deal, the political system will deliver something like an extension of Article 50. So you will have had a volatility moment as markets look over the cliff, but that will probably be a buying opportunity. If you're willing to look through that, then I don't think, as I say, it's worth sort of hedging the kind of extreme downside in sterling. We have been playing long sterling and also long volatility in the short term in sterling. I think that is a tactical trade. I think that it's much easier to see a way through the next 6 weeks or so, this path to a deal being done. In my view, in the end, that's what the European Union does. It does deals, and both sides in the end will come to that. And I think that will be positive news flow. As we get towards this vote in the House of Commons, I think we'll want to reevaluate. Then I think that's much more uncertain. But again, if you want to play this tactically, then when there's that big sell-off, if you do get a vote against, that's probably the moment you want to buy sterling, because I just don't think the economic system will allow a big economic shock to happen. It's just not the way political systems in certainly Northern Europe work.
In some ways, what we're saying is we won't get the shock because the market will price the shock and force the political system to react. So actually, you do want to be short sterling. You do probably want to take the view that for one magical week, it will look like the worst case scenario. I think
that might be right around this vote. Yeah. I think that, if you really want to play the ups and downs of the negotiations through October and November, I think it'll be very difficult to do. But on balance, I think that come mid-November, we're going to be in a better situation than we are now. So I think you want upside exposure in the short term, and I don't think you want to be spending a lot of money hedging against kind of extreme worst-case scenarios.
But isn't no deal actually true Brexit?
There are grades of this, right? There's no deal exit where you have a bunch of side deals to make sure that planes can still land, and
that's right.
But that's still going to be very economically disruptive, and I just don't see the political system delivering that.
And if we went to
I don't think there's a majority in the House of Commons for that.
And what we've seen is when sterling falls, the FTSE 100, which is mainly exporters, actually outperforms at that point. It's the domestic stocks that really underperform. People thought 25% probability of a no-deal Brexit. Don't you sell European equities as well? Because surely some of the European exporters to UK and generally the European kind of concept will be a little bit under threat at that point. So should you be selling European assets as well?
The death of the European Union ideal has been much overblown over the years. It certainly would be disruptive to certain parts of Europe, but it does seem to be that the UK takes much more of a brunt of it than EU does.
I think that's right, but I think you do sometimes get these big political events as a kind of barrier for asset allocators to kind of allocate to an asset class. I think we saw it in Europe in early 2017 with the French election, the threat of Marine Le Pen. Even though the central case was not a Le Pen victory, I think a lot of asset allocators from other continents, particularly kind of US and Asian asset allocators, to say, I just don't want to own this risk right now, so I'm going to wait for clarity. And then you saw a lot of money come in after it.
That's been a very interesting point, though, about the perception, I think, of political risk, because there was, a series of events, obviously, with the vote, with Trump, with the risk of Le Pen, et cetera, et cetera. And yet, then, since that period, we seem to have hit that utter stellar, stop everything, rising tide lifting all boats, all risky assets doing brilliantly. And it's quite an interesting point here for political risk, where I would argue that it is one of the most underpriced, underappreciated risks
on average
out there.
I think it's a premium you want to own like any other, because the market generally tends to run away from things it doesn't understand, and therefore those assets normally are systematically underpriced. It's a premium that's going to suffer drawdowns, of course.
And we've seen it with sort of the hedge fund communities operated quite differently in all these scenarios, like Italy earlier in the year as well, versus the longer-term investment community. I mean, how are kind of the hedge funds looking at this? Will they play these short-term possibilities? Because they might only look for a few basis points leveraged up, whereas you guys are probably looking for percentage points on an unlevered basis. So how are hedge funds playing this? Or are they kind of go, no, can't be doing this?
I mean, I think if you were to talk in very general terms, that's right. There's probably more risk appetite there to play the sort of short-term political noise, whereas your longer-term funds will want to look through and try to look through that. I mean, I think with the European angle to Brexit, there will be an impact if we have a hard Brexit, which I agree with Rupert is unlikely. If we have a crash Brexit, It's going to hit European growth. I mean, we have about at least 0.5% knocked off our growth forecast for Europe, for Eurozone. If that was to materialise, the ECB is probably likely to delay interest rate hikes and sort of push out their communication in terms of how long they keep interest rates on hold. In terms of trades, I think one that I do like, kind of irrespective of what happens, is a steeper UK curve. And I think it works either if you do get a no deal or you get a sort of a deal. If you get a no deal, if you get a crash Brexit, I think the Bank of England will do lots of easing and they'll cut interest rates. And that should see the yield curve steepen. So that basically means that front-end yields go lower. Back-end yields go lower as well, but not as much as the front end, and so you get a steepening of the yield curve. Yeah. If you get a deal, I think the inflation picture in the UK is still going to be pretty sticky, and that should be reflected in back-end yields moving higher over time. So I think one way or another, the yield curve in the UK, like the US, but it is very, very flat. I do think there's convincing reasons, hard Brexit or a deal, or crash Brexit or a deal, that we get a steeper yield curve. So I think that is a trade that works in both scenarios.
Overall, everyone's fairly confident that there will be a deal. The deal will be a halfway house.
I am less confident.
Oh, right. And this is from your kind of study of the 650.
Yeah, we had a wonderful summer at my team, going through 650 MPs. We came up with 20 different criteria. We've ranked them on how Remain and how Brexit they are. And, upon that, we can then construct, okay, this group are ideologically happy with Norway, this group are ideologically happy with Canada, this group are absolutely not ideologically happy.
Very briefly, Norway, Canada, in sort of one sentence each.
In one sentence each.
Impossible to do.
Stay in the single market, simple free trade deal.
Right, there we go. So that's Canada.
I'm going to put that on my report.
Good.
But the thrust of this is, as we've spoken earlier, that there are extremes on either side. They are minorities. They are big enough to be wrecking minorities, or at least to pull policy in their direction. Both parts think that. This is why you constantly hear about people's vote, second referendum.
Who'll be Prime Minister in a year's time?
Well, I think again, famous last words, but I think one of the...
Good we're recording this.
One of the things we have now in British politics, we have a new act that was passed by the coalition government after 2010, which is the Fixed Term Parliament Act, which means that to have an election, you need 2/3 of members of Parliament to vote for an election. And that is a very high bar, particularly when a lot of Conservative MPs are worried about their seats, and they're very worried about, for the country, the prospect of a Corbyn-led Labour government. So I think it's very hard to get to an election. I think that our political system will try anything before we get to an election. So we will try a new Conservative leader. We will try reaching across the divide in the House of Commons to try and create a kind of centrist bloc to vote through a deal. An election is absolutely a last resort for most of those MPs. And so I think, for a lot of things to happen that people are speculating about, particularly a second vote, a second referendum, I think you have to have an election first. I personally think it's inconceivable that a Conservative Prime Minister would put forward legislation in the House of Commons for a second referendum. I think they would be immediately deposed. A Labour Prime Minister, maybe. So the ordering has to be election first, and an election is very, very difficult to get to.
I agree that I think an election is unlikely. I think there will be a deal. There will be a lot of volatility in November and December over the parliamentary vote. I agree. I think if there is I think what could happen is first time round it doesn't go through. May goes back to Brussels, tries to get some potentially relatively cosmetic changes to what's on the table, and then comes back a second time round. At that stage, I think there is an argument that you might have some market pressure to sort of concentrate people's minds. But ultimately, I do think we'll get a deal. I think the Conservative MPs and also lots of parts of the country, though, that are looking for Brexit to go away are going to be sadly and sorely disappointed. I can't remember who said it, but Brexit is a sort of process rather than an event. And you're completely right that Northern Ireland is extremely important. But I think we'll go into this transition period and we'll find that there's actually an enormous debate still to be had about...
I think we'll be talking about this for a decade at least.
Absolutely.
Yeah.
Well, when have we ever not been banging on about Europe?
So in terms of sequencing then, it sounds like we've got the European summit coming on the 18th of October, but the crunch time is in November, but sounds like...
Or possibly December, this vote.
So it's not
November, December.
In a sense, for the government, there's an advantage having it later because you want to create a sense of crisis last minute.
And so we'll get this period of volatility. It sounds like rather than actually being short UK assets, unless maybe you're a short-term hedge fund or something like that, it's That would be an opportunity to buy assets in the UK. So
I
you
think
keep
so.
the
If you
powder
think
dry.
if you think assets are pricing a really disastrous outcome, that's probably the moment to own a bit of that risk.
And that will probably build somewhere towards the end of this year, early next year. But by March 2019, we'll have come to some compromise by the sounds of it. But you would disagree?
I would disagree. I think there's a chance of that parliamentary vote is so deadlocked, because, again, on these numbers, approximately what we're looking at is a third, a third, a third. And anything like an election or a referendum, to go back to the public 2 years after you ask them and get them to ask again, what on earth are they going to say?
Will we
What
get a
are they gonna
second?
think?
Will we ever get a second referendum?
I think it's very unlikely. It would be so poisonous.
It would
I mean,
be.
can you imagine any good? I mean, I personally think a second referendum would probably have exactly the same results.
Yeah.
But if it didn't, I mean, then our political system would be plunged into a poisonous route. UKIP could have 100 seats in the House of Commons.
Yeah, it would be.
So I don't think it's not an easy way out.
That's where I think, the third, a third, a third issue means that getting a deal on that parliamentary vote is very, very difficult. Yes, there might then be, crisis points that try and resolve things, but you haven't really lanced the boil.
I think where I agree with Helen is that there's clearly uncertainty. And it's hard to predict. And particularly, even if you think this vote's going to pass through the House of Commons, the numbers are very tight. So therefore, the uncertainty around it is huge. But in the end, come back to the bottom line, which is our political system does not normally walk off a cliff. And there is not a majority in the House of Commons for that to happen. I'm going to have to go, I'm afraid.
Go for it. Yeah, absolutely.
Is that okay?
No, that's great. Perfect. Thank you very much.
Thanks, guys. Great conversation.
I upset you too much.
Thanks. Cheers.
Just upset you too much at the end.
No, exactly. I'm going to storm out.
Please video that bit.
We know. Let's just carry on, because I think there's a couple of final points we can just grab on there.
With all of what's gone on in Europe, the US, emerging markets even, the UK's done very well out of that. I happen to think that on the margin, this now shifts that picture, and you would just start to put a little bit less into the UK versus all your other options, which has to mean a lower fundamental price for most UK assets. To be quite honest.
And sterling has to adjust to make people find UK attractive again, I guess.
I think so. And I'm not saying it's good or bad.
Parity with the dollar?
Parity. You want to look at your euro sterling parity one touch and your cable parity one touch as well. Although the difficult part of all of option plays these days is owning volatility in a market where volatility in general has been declining.
Is this, on volatility, and not everyone can trade it, but is volatility at a level which you'd say is attractive, or has it just been another place where you're going to lose money if you try the long vol trade on the UK?
Sterling vol has moved higher in the last couple of months, definitely. But I would say relative to going into the 2016 referendum, it's still nowhere near as high.
Yeah.
So, if you think things are going to be pretty hairy, I think owning vol is still attractive.
And so just finally, you think we get to a scary hard Brexit type scenario to kick everyone's senses in? You think we are pragmatic?
There will be plenty of time for this to have damaged the UK's reputation enough for those asset allocation money to take some time to come back. So yes, maybe in 2-3 years, it could be a good time to be picking up pounds cheap, but in a 6 to 12 month horizon, I don't think so.
Yeah, sterling lower in the near term because I think market will price a bit more of a hard Brexit probability, but ultimately I think there will be a deal. But as I say, the favourite trade would be the UK yield curve, steeper curve.
Fair enough. Great. Thank you, everybody. Thanks for that. Obviously, it's still very, very hard to come up with anything conclusive. I think it's fairly obvious that potentially staying away from the UK and UK assets may be the easiest trade. So if you're outside of the UK, probably just avoid the country like the plague. And then hopefully by the end of this year, sounds like December, that's going to be the key crunch time with the 18th of October, the European Summit coming up. We'll be keeping our eyes on that. But thanks for joining us.